I've seen some of you guys' stock picks and not gonna lie, they're pretty brutal. But in this video, I'm gonna be showing you guys how I pick my stocks like NVIDIA, Microsoft, Shopify, and Roblox that have all gone up over 100% since 2022. Let's go straight into it. So the biggest thing I see with you guys is you trade a bunch of random different stocks and you guys have no clear focus on what industry you're good at and what industry you know best about. So for me, I used to build computers. I know lots about computers and technology. I'm really into technology. So that's why back in 2022, that's why I figured everything that's coming out with OpenAI, ChatGPT, things like that. That's why I figured NVIDIA would be a really good pick because of the data centers, AI. They already have all the materials like graphics cards and things. They're kind of shifting towards that anyway with the data center revenue. So that's why I knew or thought in 2022 NVIDIA would be a really good long-term pick, and that's why that stock is currently up over 800% in my portfolio. Now, same thing like a name like Microsoft. I figured a name like Microsoft, they're really big in the cloud services. That's never going anywhere. It's continuing to grow year over year and quarter over quarter. So that's why I went with Microsoft and continue to buy into Microsoft because Azure Cloud Services is a really big segment in their revenue, how they make lots of money. And one of their key factors for growth under Satya Nadella. If you guys are just buying around meme stocks like AMC, GameStop, Bed Bath & Beyond, you have no idea what their company is doing or how they're making money or how their plans to grow. That's where a lot of you guys are going wrong because you guys have no clear focus. You're focused on these Reddit names that are just continuing to go down over time. And you guys are involved in industries or stocks that you have no idea how the industries work, how they plan to grow, and how they plan to make money in the future. One of the biggest things with the stock market is the market is forward looking. So everything that's going on now, the market price is in growth. If your company has no growth plan, the stocks will continue to go down, down, and down until it gets delisted. But if you trade a name like NVIDIA with something as big as data centers and AI and how they're the key component for everything when it comes to AI and technology, that's the big growth factor and growth story for NVIDIA, which is why it's gone up so much over the last 2 years since my last video about my biggest long-term holding. And one thing I see when it comes to a lot of you guys in the comment section and how I pick stocks, is you guys have no clear idea of how these companies are gonna make money, how they make revenue, how they plan to grow, what their future stories are, because you guys are all over the place. You guys need to pick a handful of stocks you guys are comfortable with, or if you guys don't know a lot about that, just stick to buying things like VOO, VOO, or the NASDAQ 100, QQQM, because they have lower expense ratios. Individual stocks are very risky, but you guys have any knowledge about stocks or how they plan to make money, revenue, that's gonna benefit you a lot in the future. You don't have to be an expert. I don't think I'm an expert by any means, but just by briefly reading about NVIDIA back in 2022, knowing how they made money, knowing your plans for growth are, that's why I was very confident in NVIDIA in 2022, and that's why it continues to be my biggest long-term holding in my portfolio as we speak. So let's jump over to the computer. I'll break a few more things down, and then you guys can go on with your day. So one really great resource I think you guys need to start implementing a lot is learning how to read Investopedia. So Investopedia is a really great website. It teaches you almost anything when it comes to investing, but one of the biggest things is learning how to read a balance sheet. Now, again, by no means do I sit here and read balance sheets all day. If you guys are looking to invest in individual stocks, you guys need to at least have some knowledge of their balance sheets, what they're doing with it, if they're planning to grow, if they're losing money, what their operating expenses are, and stuff like that. You guys are just buying these unprofitable companies. Now, maybe you guys have some more knowledge about the company, what they plan to do to make more money in the future. But again, it's good knowledge to have about how to briefly look at the balance sheet. And even with tools like ChatGPT, you can briefly just export the whole PDF file or whatever, the investor guide, upload that to ChatGPT. Then you guys can have ChatGPT give you an assessment on what it thinks about this particular company's balance sheet and their plans moving forward. So again, be sure to look into Investopedia because it has all the resources for you guys. It's a great tool. It's like Wikipedia, but for stocks. Again, Wikipedia, Investopedia, you'll put two and two together, you get Investopedia. So great resource. And also you guys can find balance sheets on websites like Yahoo Finance, etc. So for example, if you look at something like NVIDIA's balance sheet, which is like one of the second largest company right now, Apple surpassed it briefly. But when I was talking about NVIDIA, it was like a $400 billion market cap. I'll go more into why I started to buy NVIDIA in the next section. So just briefly looking at NVIDIA's balance sheet, you can see they have about 65 billion assets currently. They have about 25 billion in cash and cash equivalents and other short-term things. But then when you come down here and look at their total liabilities, they only have about $22 billion in liabilities. They still have about $40 billion in difference between assets and liabilities. If you guys know how to calculate your net worth, it's just assets minus liabilities, and that's how you get that. Then you guys can see all the debt they have on their books, tangible book value, the shares issued. You guys can see they recently did a stock split, so that's why the shares issued are going down. So you guys can look at this to see if they're doing buybacks. The shares in the market are getting reduced. If you look at a stock like Apple really quick, or the Apple's financials, again, this website's Yahoo Finance. You can see on Apple's balance sheets the amount of shares issued reducing year over year because they're doing share buybacks and buying back shares at the open market. And one more thing you guys can look at if you guys are looking at balance sheets or their financials is an income statement. This is a really great way to view like how much money some of these companies are making. So you guys can look at stuff like revenue, total revenue for Apple, for example, they're making $390 billion per year. This is the trailing 12 months. If you guys are looking at just fiscal years, you can see right here all the numbers, the cost of revenue. So if a company has really tight margins, for example, a name like Amazon has extremely tight margins because, you know, obviously moving goods like that is a really costly business. But that's how Amazon makes money with AWS, Amazon Web Services, and they have other, you know, businesses like Twitch, etc., that can kind of offset the cost of revenue and, you know, even do some you know, tax write-offs because of the companies losing money and stuff like that. But Amazon Web Services is so profitable, and there's so much growth in that business. Again, going back to Amazon, Microsoft Azure, and that's why the cloud-based names like Microsoft, Amazon, etc., really great picks for the long term, in my opinion. Again, you can just kind of come over here, learn how to read an income sheet, balance sheet, cash flow, know where their money's going, and try, you know, just briefly look over them. You don't have to be a genius, you don't have to be a scientist. Just take a screenshot, you know, send it to ChatGPT, let it analyze it, and it can get you a response really quickly. But at least have some knowledge of how these companies you're investing in are making money, how they plan to grow, and the overall sentiment around it, which we'll get into next. So the next biggest thing when you guys are looking to pick individual stocks is knowing the overall sentiment around the company. Now in 2022, when the market was, you know, just kind of nosediving, people would say the sentiment around these stocks is kind of shifting, you know, the market's bearish, blah, blah, blah. But that's just kind of the bearish narrative people like to push on you guys to scare you. There's a great quote from Warren Buffett here: price is what you pay, value is what you get. So when the market's dipping 30-40% like it was in 2022, at that point when names like NVIDIA, for example, let's go back over to NVIDIA here. So I was talking, this is pre-split by the way. So I was talking about NVIDIA. I think I posted my video October 2022. So around $12 a share, pretty remarkable. But at that time, NVIDIA was down nearly 61%. Now you have to really think and put yourselves like how were people thinking about NVIDIA at the time? Now in my mind, I'm like, wow, this AI stuff is really cool. NVIDIA's kind of at the forefront of it. I think they're gonna be able to pivot into data centers and expand this business pretty drastically. That was my thought process at the time. When a stock like NVIDIA is down 61%, you have to think about, are you getting value at that price point? Now, personally, again, I can keep on saying it over and over. When I see a name like NVIDIA that was trading at like 130 a share at the time, that had highs of $300 at the time, I'm thinking personally, when a stock's down when a stock like NVIDIA is down 60%, the whole market's down 20 to 30%, I don't know when you're gonna get another value acquisition like that to put in your portfolio. So that's why I was really heavy on buying names like NVIDIA. Now, obviously, if you zoom out here, let's go to the weekly time frame on NVIDIA. I was talking about NVIDIA down here. You guys can see it's all the way up here. So just draw some arrows. From lows, it's up about almost 1,000%. But again, back to Warren Buffett said, price is what you pay, value is what you get. That kind of goes back to the overall market sentiment. The overall sentiment on NVIDIA wasn't too bad. It was just that the market was just dropping pretty rapidly, 20 to 30%. NASDAQ was down almost 30% that year. But lots of good things was still coming about NVIDIA. They're shifting towards AI. You know, ChatGPT came out in November of 2022. The AI revolution was upon us. Then in 2023, when the market started rebounding, everyone's like, oh my God, I knew NVIDIA was a great buy, but no one wanted to buy it. In 2022 was down 60%, but everyone wants to buy when it's up at $400, $500 after their amazing earnings. So again, price is what you pay and value is what you get. Word to Warren Buffett. So again, something you guys can kind of gauge to see if a stock has potential is the compound annual growth rate. Now again, everyone's gonna say their past performance is not indicative of future results, etc. Again, but if a stock like NVIDIA on average returns, on a 10-year average returns, you know, 75%, or like a 15-year average, 50%, 20-year, 40%. This is a good way to gauge if a stock has growth potential. If you guys are in the technology sector, this is why I'm so heavy on tech, because there's a lots of growth here, especially because I'm pretty young still. I'm like 26 years old, unfortunately. But I have lots of time to make it to retirement. So even though I'm just picking like one or two risky names, quote unquote, individual stocks, and the last 3-year average growth rate on NVIDIA is about 65%, you know, 5 years, 92.38%. That's going to give me something to work with. Now, if you guys are buying stocks, like let's look at another company here, like AMC, because you guys love AMC. The compound annual growth rate for AMC is negative 28.71%. If you guys just park your money in SPY or even like a high yield savings account, you guys would have at least made 5% year over year the last 3-4 years besides 2022. So looking at this can kind of give you a good gauge if these companies have growth potential, they're planning to grow, and what the results could be. Now, obviously, a year like 2022, pretty unprecedented. Now, obviously, there's going to be some bear markets every now and then, but you guys have to be prepared for those, especially if you guys are investing in technology. It's going to be more volatile. You're taking on more risk, but you know what they say, high risk, high reward. So that's why having a good knowledge on these stocks you're investing in, especially for me, technology, is why I'm so heavy on it, because I know what to expect. In 2022, the portfolio was down nearly 30-40%, but when it bounced back, now I'm up about 100% on my entire portfolio in less than 3 years, just because I was ready for the pullback. When the market did pull back, I was investing lots of money more aggressively. I had cash on hand, and I was not shook at all. Actually, I was shook, not gonna lie. It was kind of scary, but I didn't panic sell. I held the line. I knew the companies I had invested into had good fundamentals, and I knew that the leadership behind them was good and they're not going to go anywhere. And that's what I did with NVIDIA. Again, let's look at like a name like Microsoft. Microsoft year to date's underperforming SPY, but historically Microsoft has a great, compound annual growth rate. 5-year return was 23.8%, 10-year return 24%. But Microsoft's growth story with Satya Nadella has also been pretty remarkable. So again, just have to understand the leadership behind the companies. Looking at their compound annual growth rate to see if there's any more growth it can have, and understand what the company you're buying is. Again, going back to value, make sure you're buying companies, the price of what you pay and the value is what you get. And one of the last points I'm going to make here is going on about these speculative pick names like Shopify. Now, I won't lie, their balance sheet is kind of all over the place. They're not really too profitable right now. I invest in companies that I use frequently. So again, going back to like NVIDIA, I've used NVIDIA products a lot growing up. I've been familiar with NVIDIA for years. I was always buying their graphics cards. I knew they're at the front of gaming, but once the AI revolution came about, I was kind of prepared to make that jump into data centers, etc. This goes back into kind of understanding the product you're buying and what the company does. Now, a name like Shopify, again, kind of speculative, but I've used Shopify a lot to build stores. I've tried dropshipping in the past. My degree, my major was in digital marketing. So I've used Shopify, platform a lot. Compared to platforms like Squarespace or Wix, names like that, I think Shopify is the best platform for e-commerce, just from personal experience. If you guys don't have any experience with the products you're using, it's gonna be hard to get an understanding for what they do, how will they work, the UI, and how the customer experience is. So that's why when I bought Shopify, it was more so based on the fact that their platform is extremely easy to use. I think there's gonna be lots of businesses still coming up because it was still kind of in the COVID era, because e-commerce is going nowhere, let's be honest. So yes, Amazon's a big component of the e-commerce space, but Shopify, the solo entrepreneur, is a great tool to go to build a website, and very easy to get a theme, build a website, and have all the inventory managed for you in the back end. Using these products firsthand is going to give you a upper hand on these people that just never use the product. They have no idea they're buying. They're buying RAM stocks they saw on Reddit because someone posted about it. They got some upvotes. Be sure you guys are using the products you're actually investing in, and know if they're good products or not, because you are the customer. Obviously, some of these businesses are business to or B2B, business to business. But some of these platforms like Shopify are really business to consumer. Lots of their revenue comes from people buying buying domains, these monthly fees they're charging for their platforms, stuff like that, inventory, etc. But knowing how Shopify is able to make money, how they plan to grow, and knowing that e-commerce is never going anywhere, was an easy pick for me to invest in Shopify for the long term. Especially when the whole market was down in 2022, you're just buying stocks at a discount. It makes it a bit more easier to take a risk. Whereas now Shopify is sitting at about like $120 a share. Now buying Shopify up here, you may not be getting the bang for your buck. But at least when I'm buying Shopify at $20, $30, $40, the risk is pretty minimal in my opinion. Worst case scenario, Shopify gets delisted, I lose a couple $1,000s. But best case scenario, like we're at right now, my stock goes up 340%, and I took a small risk to make a pretty big reward, pretty decent profit on my Shopify trade. So that's why I went Shopify, and how I just kind of used my first-hand experience using the platform to help my decision to invest into the stock. Now, finally, the biggest thing I can emphasize is just being smart with your money. If you guys aren't smart with your money, you're taking random risk with your money, just buying random individual stocks. Understand the risk you're taking on, and knowing it's extremely risky, and you could lose all your money if you're buying random meme stocks like AMC, GameStop, Bed Bath & Beyond, etc. I've seen lots of people lose money. They never bounce back from another back working their 9-to-5 job at McDonald's because they're trying to recoup all their losses on these meme stocks. Just be smart about it. If you guys don't want to be smart and be responsible, literally just put your money in the S&P 500, just park it there. Come back in 20 years, you're probably going to outperform yourself if you just keep buying these random individual stocks. So just be smart. Invest your money wisely. Take some notes away from this video. Use it to your advantage. Again, more videos coming once or twice a month. Hey, maybe I'm getting the hang of it now. I'm kind of liking this, but hey, until next time, peace.